The 2008 financial crisis was the biggest crisis the world has ever seen since the Great Depression. The catalyst for this was the US housing market, which saw the dramatic decline in global financial markets. Back then, the banks promoted inventive subprime mortgage variants to borrowers with low incomes, who had little ability to repay their monthly obligations. This time around, the financial crisis started with COVID-19 pandemic, which shook the entire world. Starting from China, eventually the entire world was infected by the COVID-19 pandemic, which resulted in offices, companies, schools and colleges to close. Countries enforced lockdowns that lasted for months and people were left stranded in their homes. Consequently, many businesses saw poor or no sales and earnings, which resulted in increased unemployment. All of this had a massive impact on economies throughout the world. In 2020, it was estimated that global trade decreased by 5.3%. Furthermore, the governments taking loans from World Bank and IMF skyrocketed, and deficit financing was implemented. Even worse than the 2008 financial crisis was the loss to nations in terms of GDP growth. China managed a GDP decrease of 2.3%, whereas India had a decline of 7.3%, and the US a decline of 3.4%. As the world was still putting the pieces together following the pandemic-driven disasters of 2020, Russia declared its invasion on Ukraine at the beginning of 2022. The war was resulted in roughly 10 million people running away from Russia's invasion, which is the most in Europe since the 1990s. In terms of the economy, not only did both nations suffer greatly in terms of defense spending, depreciating currencies, and subpar corporate performance, but the world at large witnesses skyrocketing prices for basic commodities like crude oil, natural gas, sunflower oil, zinc, and extra things. In addition, Europe is now experiencing an economic downturn in several of its members' countries. Credit ratings have fallen, interest rates are rising, inflation is alarmingly high, and people's lives have become a living nightmare. It won't be wrong to say that many nations, which were still recovering from the effects of COVID-19 and its newer variants, had regressed economically by decades. If we look in the past, financial crises have been brought on by a variety of factors including economy, society, politics, asset bubbles, and now pandemics. The most recent US inflation reading was 9.1%, which is a 40-year high. The core inflation rate, which excludes the extremely volatile food and energy sectors, is currently the part of the headline inflation data that is most closely studied. Therefore, core inflation serves as a gauge of how inflation is spreading throughout the larger economy. Whatever the source, the effects have always been terrifying. Every financial crisis has a negative impact on the economy, people's quality of life, and most crucially, our expectations for a brighter future. Numerous experts predict that the current economic climate will result in a financial crisis even worse than the one that occurred in 2008. Thanks for watching. If you like this video, please share and leave a comment. We'd love reading your feedback, and don't forget to subscribe.